The crypto markets are at a major crossroad again. Bitcoin is catching fire with the Bitcoin ETF inflows reaching over 270 million, which is signaling a very powerful rebound while shorts are closing fast. But wait, there's more. There's a growing wave of accumulation as long-term holders keep stacking. And with the dollar weakening, global liquidity is soaring. So one could ask, is this the moment we've all been waiting for? Why? Because stocks are finally starting to show signs of life again after one of the worst starts to a new year we've seen in a long time. And it appears retail is buying up the dip, all while the Fed is facing one of the most serious decisions it's had to make in a long time today. Many believe that interest rates are going to remain the same. That said, many are looking at the dot plot to reveal what the Fed's next decision might be. So let's break it all down in today's video as I get into the data and research for you. Hello, if you're new to my channel, my name is Jessica and I'm so happy you're here today. And without further ado, let us jump into today's video. Okay, so first and foremost, glancing at Bitcoin's price, we're currently sitting at about $82,734 per Bitcoin. Now, earlier today, we were at 83, trying to break out towards 84. We know at this point, this is the tail end of the storm, so we're not going to get caught up in Bitcoin's price. So let's keep going through today's data so we get a picture of where we are in light of the market. Now, what is so exciting is that we are finally ending a very negative downturn of the Bitcoin ETFs inflows or outflows. And you can see that yesterday we closed March 17th with one of the healthiest inflows into Bitcoin ETFs that we've seen in a long time. So we ended the day yesterday with $274.6 million coming into the Bitcoin ETFs. Once again, remember that a lot of this value rolls around from different investment opportunities within each of these investment firms. So really, this is a huge vote of confidence for these traditional investors to be rolling their money back into Bitcoin, which is still more or less considered a risk asset. So it's a really strong signal for us to take into account. Now, moving on for some more fantastic news, you can see that Michael Saylor, through his company Strategy, formerly MicroStrategy, also just stacked up. They acquired an additional 130 BTC. So this is incredible and a great vote of confidence into Bitcoin and a strong signal of how the market is trying to bounce back. And as we can see shared here by Carl M. Munger, he shares with us also an interesting fact that essentially we're seeing everyone who was shorting Bitcoin, everyone who was doubtful of Bitcoin going up in price, that was betting against it basically, they have been closing their positions, which is also a strong market sentiment that tells us people, or the general, I would say more so traders in the market, it seems like they are not so bearish anymore. They are starting to become at least neutral. I wish they were bullish and believing in Bitcoin's price, but at least they're not bearish anymore. So they're not betting against Bitcoin. So this is a really big indicator of the sort of crypto native, Bitcoin trader native sector of the market now becoming at least neutral, as I said. So this is another great market sentiment indicator to pay attention to. Not only that, but if we pay attention to another strong indicator, it's called the UTXOs. Essentially refers to the unspent transaction outputs that have remained unspent for a period of 3 to 6 months. So it goes on to say that analysts often track the age of these unspent transaction outputs to gauge market behavior and sentiment. So the fact that these unspent transaction outputs have been rising signals to the fact, as Grok puts it here, that people are not spending, like holders are not selling or moving their coins. They're accumulating, as Grok also explains here. It signals accumulation. So it's a really bullish market sentiment indicator as well that speaks of basically the fact people are HODLing because they still believe in the space. And if we add to that, and these indicators that I just went through, the fact that the US dollar index, as I share with you here on the screen by Axel, if we pay attention to it, you'll see that the dollar index in comparison to the other currencies of the world is at an all-time low, currently at $103.5 in comparison to other currencies of the world. So this is actually like a twofold indicator, kind of like a sword, one side and the other. While on the one hand, it signals that the US dollar is weaker, so it's more appealing, as Axel explains here, to foreign investors because they're like, hey, real estate is cheaper. I can go buy, more for less using the US dollar because it's worth less. So while on the one hand, it's good for the international investors of the world, it also puts investors in a position to want to diversify into riskier assets that might give them a larger return because it also signals to inflation. Obviously, the dollar is losing its value. So this is very interesting to keep in mind, especially as the FOMC announcements are today in the US. So let's see what happens next. That said, what is also very interesting is that the stablecoin market cap, as we can see on this chart shared by Quinton, has reached $200 billion for the first time in history. And this is amazing because while on the one hand, it signals to, as Quinton puts here, so much dry powder or additional liquidity and money that investors have to invest into cryptos, it also signals to the fact, as is implied here, that typically the way it works in the crypto market is that to invest in specific cryptocurrencies or even Bitcoin, oftentimes and first and foremost, investors buy, or everyday people first buy USTD and USDC. They buy stablecoins because then that's easy to trade into other cryptos. So the fact that the stablecoin market cap is at an all-time high of 200 billion, it is a very, very, very strong signal for the crypto market being on the verge of breaking out. Not only that, it's great for the US dollar because, as you may have heard in my past videos or maybe on the news on your own or in your own reading and research, that many of these stablecoins hold US Treasury bonds to back their stablecoins because they're pegged or attached one-to-one. So it seems to be, a threefold sort of benefit to the US, to the crypto market, and to the market at large. So quite fantastic. And if we were just to zoom out and compare the value of stablecoins as compared to the top companies or countries, in this case, of the world, you can see how it compares to PepsiCo and McDonald's. It's just minutely short of McDonald's market cap and a step up over Pepsi's market cap and well above Slovakia, Morocco, and Nigeria's market caps. So in terms of estimated GDP, so this is quite astounding and is such an incredible case for the fact that the crypto market is growing so much. But okay, also zooming out even further, because that's so important to do always. If we were to look at where we are right now in terms of the correction that the crypto market and Bitcoin has been experiencing, as you can see shared here by Rect Capital, that this current pullback, which is approximately 29% of a drawback in price, is one of the deeper retraces in the cycle, right? This cycle, not all cycles, but just this current cycle that we're in. But after all, it's important to remember that this is not the deepest retrace that the crypto market has seen. We know that back in 2021, as I highlight here, we saw corrections up to negative 55%. And in 2017, the cycle before that, we saw multiple corrections at 34%, 34, 40%. So what we're experiencing right now is normal, although it may be painful to watch depending on how you're allocated into your investments, which is really the conversation at hand. If you're being so affected by Bitcoin's price and the crypto market's price, it's either because you're new and you haven't lived through this before, which is normal. I felt this way as well during my first bull run and bear market. It's all very new. So that's you right now. That's normal. So don't feel bad. but just know that it's normal. And as you can see on the screen here, take a screenshot if you need it, but entirely normal. And then secondly, your only other concern would be, or an understandable concern would be, if you are allocated into crypto investments that, you know, were just hot air, like not real, didn't have any real fundamental legs standing under them. So those would be the only two real concerns I could see for somebody having, in which case, you know, if you're in the latter or in the second bucket of these people, then it's a good time to rethink where you have your money. And I think, though this is not financial advice, it's smarter to move that money into good crypto tokens right now, even if it's at a loss, than keeping it in garbage, because at least you can save that value and put it into good crypto investments. But zooming out even, you know, to a greater extent, if we take a look here at what is shared by Kobesi Letter, you'll see that it's not just the crypto market that's looking to bounce back up, but the whole general stock market is in green today, except for what is called the top magnificent 7 stocks, which are like Microsoft, Nvidia, Apple, Google, Meta, Amazon, and Tesla. Now, you might ask why, and there are many reasons for this, speculatory reasons, which of course it's hard to prove. But first off, it may just be that the investors that were invested in these top magnificent 7 stocks just decided to reallocate into other stocks. So that may be one, just the rotation of capital. And then 2, we know that the general, you know, regulatory uncertainty has been a theme and has been affecting them. There are many factors. Also, valuation concerns. I know I've heard this on multiple different podcasts. But, you know, we know that with DeepSeek coming out and really challenging OpenAI and showing how much could be built on a smaller budget in terms of AI and AI technology, this really shook the investor world, so to speak, because they were investing so much into so many of these companies that use AI at much higher costs or valuations, now realizing that it could be done for cheaper. So who knows what's going on there, but we'll keep moving on. I just wanted to comment on it because it's kind of interesting, right? That like the biggest companies in the stock market that usually lead the S&P 500 are down while the rest of the market is up. But the main takeaway from this snapshot of the grander scheme of the market is that basically it's almost all green. That's the takeaway here. So that's fantastic. It really signals to the fact that the market as a whole is coming back to life. So really exciting. And as you can see here, also shared by Kobesi Letter, it looks like retail investors, which are more like the normal investors. When you hear retail investor, it means like more of like the normal investors, not VCs or funds or professional investors or traders. It signals to the everyday sort of investing person. So right now you can see that apparently more retail investors, which is awesome. It means they're waking up and realizing, you know, the everyday person, the everyday investor is realizing more and more the value of their investments. They're becoming more educated, and it's awesome. You know, I'm so happy, and I would hope that my channel contributes to this. To the education of the everyday person. But apparently, as you can see here, they're in buying the dip, with retail purchases of US stocks and ETFs reaching approximately $3.2 billion on Monday and Tuesday last week, which is phenomenal. And then lastly, we know that today is such a huge day, Wednesday in the US. So stay tuned because we know there's going to be the Fed's announcement of interest rates. So hopefully, despite the pessimistic general market consensus, sentiment anyway, that interest rates are not going to get cut, they're going to stay the same. You have to remember that that's also a reflection of people's current sentiment being more or less still down. So when you're not feeling good, you're feeling down, you tend to see the whole world negatively. So that's how I see this, what I highlight on the screen here, stating that investors are still 99% certain that the Fed will hold rates steady or not give them a break, basically, right? Now, remember that I am eternally optimistic, and that is because I have followed and read in depth the profiles and the backgrounds of everyone backing President Trump, Scott Bessent, Lutnick, so many of the key decision makers, Secretary of Commerce, so many of the people he surrounded himself with are highly educated, highly pro-Bitcoin, highly pro-crypto, have a lot of experience, and I believe that the market's going to turn, but we will see here very soon. But okay, guys, that's a wrap for today's video. I hope you feel more up to date on what is going on in the market and that you too are feeling optimistic. So important to manage your emotions when you're investing, which also comes down to knowing your risk profile, of course. So it's important to know how much you have to put in the crypto market, which should never be more than you can afford to lose. Always have your bases covered first. And then from there, the rest should be just like watching the Weather Channel, you know? Hopefully you're not in harm's way, which comes down to managing and knowing your risk profile. But okay, enough on that. And I will catch you guys here tomorrow in my video. Have a great day. Ciao.